Hey everybody, welcome back to Liberator Trading. I wanted to go over something that if you get confused, you're like, why did the market move all the way here? Why is it there? Man, that was a big drop. Or wow, we really shot up right there. I wanted to help you set some expectations for how the market moves and what the expectations are for the market. A simple tool that you can use is the expected move. Statistics is done with math. They use it for the options market. It is used extremely well to help you understand what the probabilities are of staying within a certain range. And it is going to help your trading so much more. And it's also going to help you not freak out when the market starts to move in dramatic fashion as it does. So let's dive into it and let's talk about how you can figure out how to do and plot the expected move. Okay, so first, pull up SPX here. SPX. Let's get it pulled up. Then let's go into our trade tab. So first, let's figure out what the weekly expected move is for the rest of the week. We go in here, we look for Friday, September 5th. There's your options chain. Let's pull it up. Over here, this is inside of Thinkorswim. It's calculating the implied volatility for that day. There's a lot of math that goes into that, a lot of calculations. We're not going to go over that, but see this number right here? It says 77.329. Okay, let's go back to our charts here. All right, 77.239. Open up the calculator. Type in, where did we close today with SPX? We closed it at 64.15.54. So 64.15.54 plus 77.239. So our expected move here up at the top is $6,492.77. 6492 point, we'll call it 78, and we'll call that September 5th expected move. Now this is for Friday. We'll show that. Another thing that I'm gonna, we'll start with that. So then you just plot that. Oh, I forgot to put show name on right. There we go. Duplicate it. Pop it down there. Go to edit properties. Then we take that same calculation, 6514.54 minus 77.239. Okay, we've got 6437.30. Hit save. So that's pretty interesting right there. So, sorry, today, September 5th, the expected move from today, where we closed at, which was 64.15.54, is saying, I put that in wrong. I did my math wrong. Apologies. 6415.54 minus 77.239. I did my math wrong. Sometimes you got to double check yourself. I was like, what the heck? There we go. So the expected move for the rest of the week is up there and down there at the bottom. Now I took off my expected moves for this week already, but let me just show you here that the expected moves start from last week were actually slightly different because it changes throughout the week. Now, the reason that this is so important to understand and to maybe start looking at yourself is because the moves that are happening that you think are crazy and outlandish when you're trying to trade and day trade, you might think like, what the heck is going on? Okay, so this was the lower weekly expected move. As you can see, we went down at below it, and then we popped it inside, popped up back on top of it. What the freak? Anyways, come in here, grab that lower expected move. Anyways, we'll drop that. I'm sorry. We'll just we'll remove those. So for the rest of the week, these are the expected moves, and this is where we are expected to be going. This is a standard deviation move from the close. And this is a 68% chance that the SPX is going to finish inside of that move. And so ways that you can trade this is you can understand, okay, if we get up here to the expected move, we're most likely probably going to stay within inside of that channel. If we get down here, you're most likely going to stay inside of the channel. Now, yes, you can move outside of that, but a lot of the time that's from factors outside of the market, such as news events, economic data that we receive, FOMC meetings. They increase the volatility, which increases the expected move. Now, the way I like to trade it with the expected moves, and a lot of other people that I have learned from and understand, is they like to fade those expected moves. And when they get outstretched outside of it, they like to have a reversion back to the mean to come back into the statistical probability of where it's going. Now, this is going to be very helpful for you, especially for a day like today, opening up on a Monday, and we moved way down. So let's go dive into the expected moves here from today. So here we are. I mean, I'm going to remove those old, I'm going to clear the drawing set. We're going to come up here. I've got these written down. Let's see here. So for today, the expected move for today, the upper expected move for today was 64.91.19. That was the expected move. Going to duplicate that, drag it down here, edit our properties. The lower expected move today was 64.29.33. So that was the expected move for today and when we opened, but we opened way down outside of that. Like way out of it. Like we're 2 standard deviations outside of the move. The 2 standard deviations was 63.98 was the 2 standard deviation move. We got outside of that. We tried to come back out, and we didn't like it, and then we reverted back to it, rejected it, and then moving up into the end, we ran into it. Now, the reason that I like to use these, it just gives me an idea of where the market could go, what the expected move is, how it can move. It's also just going to help you with your understanding of the market and the probabilities and statistical nuances that happen in the market, and how you can then move forward and understand what we are actually doing and why the market's moving the way that it is. So I would like to just invite you to do that. You can do it on anything, by the way. So let's clear this. Let's go pull up Apple. Pulling up Apple, get it up here. I've got some other stuff on there. All right, Apple moving into the end of the week. We have an expected move of $5.27. Let's go back here. Let's draw on here. So an expected move of $5.27. We closed at 229.72 plus 5.27. So its expected move is to go to 234.99. So actually right at that mark that I have here. That's funny. So there's that. And then the lower expected move is going to be 224.45, which is also fairly close to my levels that I've got going on. We'll just call it right there. So as you can see, Apple is expected to move because of these moves and the options market and how everything is trading, and the implied volatility is high this week because they're leading into the September 9th let's talk about all the stuff that's going to be coming out. So their expected move is going to be bigger than normal. It's $5. And so there is an expected move. So do you want to? You could say, I think Apple's going to be doing good moving into the end of the week. So you buy a call, or you can buy a put going in a certain direction. You could do a spread. You could do a condor because you want to keep it inside of a certain range because you think it's going to stay inside of there. You could take your trade that way. But like I said, understanding what the expected move, it's going to help you understand how the market is moving. It's going to help you realize that things don't just always happen arbitrarily. They actually move within an expected range, and it's not just a guessing game. When I started doing this, I started using it. I started not guessing where the market was going to go. I had an understanding of where it was going to end up, where we could potentially go. And if I started to see certain moves happen on inside of SPX, inside of the Qs, inside of the SPY, you could do it with anything. So remember, you type in your ticker, you come to the trade tab and you look for a Friday, or you could do it for the next day, depending on what you want. You take that implied move and then you add it on to the close of that. Now I have a indicator that's got expected move and an implied volatility range as well that I used and that I've created, and I've shared this on X. But as you can see, my expected move was actually all the way down here that I had calculated. And this is automatic, it does this every week. This is a weekly setup. Actually, I can show you right here. I will not be sharing this with anybody. I just keep it to myself. But for the daily, you can see we came way outside of it and then we came back inside. But for weekly, we tagged it and then we came back up. Just because that's the expected move. So there's going to be a lot of hedging in the big firms and the funds. They're saying, okay, we're way outside of where it's expected to go. We can bring it back. Market makers like to help with that. So my invitation to you is go figure out how to do this expected move. It's going to help your trading and understanding of how the market is moving and where we could potentially go moving forward. Quick video, a lot to unpack, a lot to understand. Shared a couple of examples how you could use to trade it, but it's just going to be helpful in understanding at certain levels what happens around those expected moves is there's usually a reversion back to the mean. Hope you have a good rest of your day. Hope you have a good week.